Narratives are what raise VC money, but fundamentals are what sustains the token price. Project might raise on AI/crypto narrative, but by the time their token launches in 12, 18 months later, the market's attention moves to something else. The narrative cycle is absolutely shrinking in crypto.
Our guest today is a venture investor with years of experience at top firms. He brings a rare combination of traditional finance expertise and hands-on crypto market experience, focusing on investment opportunities in crypto and Web3. Matthew, it's amazing to have you. Welcome to the show.
Thank you so much. Thanks for having me. Quite excited.
So before we get into Anchorage Digital and all the exciting stuff you're heading over there, could you tell us a bit about your background? What does your story look like? How did you get to where you are today?
Absolutely. Yeah. So I started my career in traditional finance. I started working at Ernst & Young. I was working in their valuation practice, and that really gave me a pretty good foundation for finance, building models, looking at financial statements. And then from there, I moved over to private equity. I was working at TPG, and I was sitting in the middle office. So I was doing portfolio company valuation work. There were a handful of deals where I was the lead deal associate, but it was a lot of portfolio company valuation. And then from there, I moved over to Falcon X, which was my first job in the crypto space. The first thing that I worked on was standing up and creating their venture arm. I did that for about a year, and then the bear market hit in crypto. So leadership came to me and said that they wanted to reallocate those funds to another part of the business. So at that moment, I moved over to the market making side of the house. I did that for about a year and a half. I did get the go ahead to start investing again out of the VC arm. So I was doing a little bit of VC, a little bit of market making towards the end of my career at Falcon X. And then in the last year, I moved over to Anchorage, and right now, fully focused on ventures. They didn't have a venture arm prior to me joining, so very similar to Falcon X. I helped spin up and create the venture arm, and right now I'm leading all efforts around sourcing deals, due diligence, and everything involved in terms of standing up that infrastructure.
So what really motivated that shift initially to crypto? Was there something that you saw in the space, or just kind of was the natural progression of your career?
Yeah, great question. So I actually got introduced to crypto when I was in college. So when I was a senior, one of my roommates stumbled upon crypto and he introduced it to me. I had no prior knowledge, didn't know anything about crypto, but I started following the markets. I believe it was summer of 2017. And when I initially started looking at crypto, ETH was, I think, at like $4 or $5. And then that summer, I saw ETH trade all the way up to 300. So
Yeah.
I thought, hey, this is quite interesting. There's definitely something here. So then I started doing my own research. I ordered some books and really started to understand what blockchain technology was. And immediately I was hooked. I was like, hey, this is super interesting. I did think that, it was a better kind of construction than traditional finance, but I did wanted to keep my path in traditional finance, build kind of the foundational layer there, and then move over to crypto eventually. So it took me a while to kind of figure out like how exactly I wanted to get into crypto. And I actually stumbled upon the opportunity at Falcon X through LinkedIn, but I had a few mutual connections there. So that's how I kind of found crypto. But I had always been interested and had started doing kind of personal investing on the side while I was working at EY and TPG.
Mhm. How did your perspective kind of evolve over time then? As you were, I'm assuming at the time in school, learning about more traditional finance related topics. What was it like kind of contrasting that with what you were seeing in the crypto space?
Yeah, absolutely. I mean, joining the crypto space initially was definitely a bit of a culture shock. Crypto itself is a completely different beast than any other kind of traditional industry, whether it's healthcare or technology or software. So it was definitely drinking out of a fire hose when I initially started, but I really fell in love with that fast paced environment. It is a little bit of a love hate relationship, I think, which is how fast paced crypto is because I'm
Yeah.
constantly having to learn new things, keep up with what's happening on a day to day and obviously a weekly basis.
Yeah, a lot of adjusting kind of
Yeah,
always happening.
right. But I really do love being at the forefront of innovation and specifically being on the venture side within crypto. It's awesome to have an ear to the ground in terms of like what people are building, what's getting funded from VCs. So I really love that element of being in a like very fast paced sector and being able to learn a lot and really just dive in. So that's what I really love about crypto. And yeah, overall, I mean, I think like my perspective has definitely changed within the crypto space. So the space itself is certainly maturing, and you've seen this over time and throughout many cycles, right? Like back in your like 2021, 2022 days, you saw, kind of the poor or risky business standards that were wiped down crashes. So like your three arrows with off-platform lending and extreme leverage, shady business practices, obviously FTX. Over time, the industry has definitely matured. And I definitely see now, and everyone can really see this, that institutional capital and attention is really finally coming to crypto. Another thing that I think is kind of great over time is bad actors, I think, are kind of slowly getting pushed out of the space. You still have your grifters, but I think
Yeah.
as the space has matured, it really has disincentivized or made it more difficult for those types of actors to profit or exist within the crypto space.
Yeah. Less of a spotlight on them. As the kind of space is getting bigger and more, broad reaching, there's less of a big shine on those people.
Right. And yeah, so to me, it really seems like the DNA of crypto is slowly starting to change a little bit. At the beginning, you kind of had the memes of like, thinking this, I'm only here for the tech while, market is crashing. And
Yeah.
I still see that like the fundamental DNA of crypto is all about making money. You look at crypto today, like most of the eyeballs, attention, TVL, institutional capital is in DeFi. It's trying to generate yield. It's trying to make money in some form of another, whether it's DeFi, staking, RWA, yield bearing stablecoins. What I think we're slowly starting to see interesting protocols and mechanisms that are being built that are, kind of finally institutionally grade for investing or diversifying. And so here I'm kind of talking about, again, RWAs, yield bearing stablecoins, really quite excited about that space. Slowly but surely, I think the DNA is starting to change a little bit and just become more mature.
Mhm. Yeah, I think kind of talk about that increasing maturity. As you've been in crypto for quite a while now, how do you think venture strategy has really changed in today's crypto environment to back before, where you had to maybe be a bit more cautious, had to be a bit more weary of what you were investing in? Is that lesser now?
Yeah, so the venture space is quite interesting right now. I think investors definitely have to be more cautious today. And maybe it's not more cautious, but it's certainly more thoughtful and more strategic in their strategy. Back in 2020, 2021, that was really kind of the first big heyday of venture capital within the crypto space. It was still in a time where when you had a bull market, every single project in the crypto space went up in value. It was a
Mhm.
rising tide raises all boats type of situation. And so you didn't necessarily have to be like the smartest person in the room or make the best bets. If you were allocated into crypto back in like 2020,
You were seeing something back.
one of the biggest ways that the market has matured is that it's just gotten so difficult to launch a token in today's market.
Mm,
And the reason for this is a few different things. So, one, it's the fact that there are so many tokens in the tradable universe that liquidity is
yeah.
stretched so far within crypto that it's just so thin relative to where we used to be when there was 500 or 1,000 tokens in the tradable universe.
Yeah.
Two, there's absolutely no retail demand. Three, there's very, very little demand for new token launch. Plus, things like 1010, where liquidity is certainly much drier than it was prior to that event. It has just created an environment where it's so difficult to launch a token. And because of that, I've started to see a few themes on the venture side. To me, it kind of seems like the venture space is getting pushed into a little bit of a barbell strategy right now. And what I mean by that is VCs are kind of pushed to either make a decision of we have to be a super early stage investor, only focus on pre-seed and seed, and be hyper focused on valuation. The other side of the house is you have a bunch of big premier venture capital firms in the space that are increasing their size and focus on growth style bets. A16Z and Paradigm both had recent fundraisers for the growth funds. It's kind of an interesting dynamic where you're kind of either getting pushed to being super early or more late stage is a completely different strategy depending on which side of the house that you are on as a VC. But I think just with how difficult it has been to make money as a VC in crypto, that you either have to be super valuation stringent given the volatility of tokens, how difficult it is for a token to, not drop 80% after the first 6 months, or be super savvy growth investor, super hands-on, and pick a project that gives you a little bit more flexibility in terms of managing that investment. Growth investors, they're always taking a position in a project that's going to have perp markets. They can effectively manage that position even though they have locked tokens. So it's a completely different strategy, but that's definitely something that I've been seeing.
And kind of speaking to that barbell look to the crypto investing space right now, what do you think people in the middle can do? It's a bit of a tough spot to be in. I think it's a very challenging market environment to not be that fresh, brand new project everyone's talking about, or that, massive, more trustworthy, established project? What differentiates those stronger ones in the middle?
That's a great question. I mean, as a VC investor, I think it's very difficult to operate in that middle space because you just don't have the power law of getting into a pre-seed or a early seed round at like a 15 mil valuation. In the middle, you're kind of operating at that, maybe 60 mil to 250 mil valuation. And say you raise a $250 million round, say it's a, Series A growth round. You could launch
Mhm.
at 400 and then drop to 100 within the first 2-3 months.
Easily.
It becomes very difficult to live in that middle area. Touching on kind of your second point, what really differentiates strong projects from the rest? A lot of different things. So first, focusing on the founder side, founders absolutely have to be nimble and they have to be able to pivot. You are almost never going to get it right on the first iteration, especially in crypto where there's so much being built. There's so much competition in the space. You're constantly racing to like get to market first because you have so many copycats. You have
Yeah.
this kind of open source style to crypto, and it just invites so much more innovation to the space that you really, really have to be nimble.
Mhm. Do you see that quite often with founders sort of sitting on what they've established instead of jumping to something new?
It's less like a full pivot, but it's more so the ability to kind of slowly adjust as you
Mhm.
build out your product, whether it's a product service platform, and then being able to kind of adjust on the fly. So I definitely see situations where a founder starts down one path, realizes they don't really have something and they have to fully pivot. I'm not
Mhm.
necessarily talking about that. It's really kind of the nimble pivots along the way. Yeah. The second thing that I would say is founders really need to either have previous crypto experience or surround themselves with people that have crypto experience. This is a huge one. There's so
Mhm.
many times that I see a founder that's coming to crypto for the first time, potentially had a bunch of success as an entrepreneur building something in a different sector, and they might have all the tools and bells and whistles to be able to build kind of what they set out to, but as soon as you bring in elements of crypto, like launching a token, thinking about liquidity, like a lot of them don't have the skills to understand that. And it constantly is a huge problem. We also look for institutional readiness. And this is a little bit more specific to the types of projects that we're backing at Anchorage, given that we are a strategic and more of an institutional player in the space. But that's definitely something that I look for. The kind of third thing that I think is really important is that I think founders a lot of time misunderstand the competitive landscape that they're operating in. And so I can kind of give you an example. So
Yeah, go for it.
say a founder is building an Athena competitor, but rather than deriving the yield from Ethereum, they're doing yield generation strategies, trading Bitcoin, for example.
Mhm.
I oftentimes I'll, and again, this is just an example, but a lot of times I'll see that founder and they view their competitive landscape as like, okay, we're a Bitcoin yield play. We're
Mm.
competitive with all the other Bitcoin yield companies. I don't agree with that at all. I think that anyone that's building in the yield space is competitive with everyone else that's building in the yield
Yeah.
space. At the end of the day, you are competing for dollars and TVL. And so you have to assume or you have to operate under the premise that you are competitive with all of these other players in the space. And so, yeah, I oftentimes just see founders like think their competitive landscape is so much smaller than it actually is.
Yeah.
Yeah. And then another thing that I think is kind of specific to crypto is founders that really understand incentives. And this is really important on the
Mhm.
tokenomics side of the house. So it kind of goes back to understanding like buy and sell pressure of a token. And it is really, really refreshing to see a founder that has already thought about where the sell pressure might come from before the token is even live. And that's definitely relatively rare. But in addition to that, outside of just kind of buy and sell pressure, one of the big ways that founders and protocols gamify early users, traction, TVL, is through things like airdrop farming. And so
Mhm.
another huge thing that I really like to focus on is, understanding the go-to-market strategy for founders and how they personally perceive the underlying incentives that they are creating at the end of the day. Like if a go-to-market approach from a founder is like entirely gamified, that capital is going to leave as soon as that token is launched and the incentives go away. And so
Yeah, I think that's seen quite often, especially nowadays. You see a lot of founders that maybe some of the earlier projects, but they're doing that very, very gamified launch. And then as soon as it's done, it is tanking. Like I saw that with like Lighter recently. They had a big airdrop farming, and then as soon as the TG happened, everyone's gone, and the price dropped like 90% in a couple days.
Exactly. And not to say that like all forms of gamification from a go-to-market perspective are bad, but it's for me, it's like I really love viewing how the founder kind of perceives that specific strategy. Because if they kind of see that as the end all be all, it's like, okay, this is
Mhm.
potentially pretty dangerous.
Bit
But
rocky.
other folks use it very advantageously or very smartly. So not to say that all kind of airdrop gamifications, a lot of it is very necessary. But it's really important to like really digest how the founder is kind of perceiving those strategies. This goes back to like exactly what I was saying about having crypto experience. Like someone that's coming from the traditional world doesn't fully understand incentivization type designs, and oftentimes then it comes to hurt them at the end of the day.
Would you say that's the main thing then? Just experience? Or is there some level of extra preparation, surrounding yourself with experienced founders that may be able to, give someone that's still new to things a leg up?
Yeah, you definitely don't have to have it all figured out. Certainly have back founders that, are coming into crypto for the first time. And a lot of folks can surround themselves with the right folks, whether it's an advisor, whether it's having, certain VCs on the cap table that are a little bit more hands-on and a little bit more helpful. There's many ways to do it. So it's not just a founder that, has successful crypto experience, but really trying to understand like, can this founder be able to adjust and pick up things that he wasn't accustomed to and a previous entrepreneurial experience. That is really what I'm trying to get to at the end of it.
Mhm. Yeah. I didn't kind of move past that. I kind of touch on your traditional finance experience a little more, 'cause I think that is a very unique thing that not a lot of people in crypto have, very in-depth experience on both sides of things. How do you think about valuing crypto projects compared to traditional finance projects? Is there frameworks that still apply? What doesn't? What's the key difference to seeing a project in either of the spaces and understanding this is how much this makes sense to be valued at?
Yeah, that is such a good question and is something that I am thinking about constantly. Crypto valuation is completely different than traditional valuation. Completely throw it out the window. They are nothing alike. In traditional finance, you use very common and battle tested methodologies like DCFs, comparable multiples, to derive a company's valuation. It's actually pretty simple. Like during my days at TPG, when I was valuing portfolio companies, when I would do it on a quarterly basis, I would take the quarterly financials from a portfolio company, add that into the model, essentially assess how well their previous quarter has been. Are they up or down? And then adjust a multiple accordingly. Like pretty
Yeah,
simple.
they're quite established models there.
Right. So it's pretty simple. It's just completely different in crypto. And so the reason why it's different in crypto is financial statements and revenue are not the driving factor in valuation. In fact, historically, I have viewed putting financial projections into a deck as a major red flag, as it shows, founders don't really understand the space that they're operating in. And this is it's pretty rare. I would say I've probably seen less than 1% of all the fundraising decks have financial projections. So it's pretty rare, but it's definitely a red flag.
Yeah.
I would say it's starting to change a little bit for companies that are a little bit more institutional in nature, like RWA, but still pretty rare to see financial projections. So instead in crypto, you are, I guess, kind of valuing like a network economy. So valuations are driven by, TVL, developer mindshare, no decentralization, things like that, versus the actual economics of the company. And so it's completely different in the sense that, if you look at a company in crypto, maybe you're looking at a yield bearing stable coin that is trading at 100 mil valuation. They have 150 million of TVL. If half of that TVL is tied to one large player and they pull their position, then the valuation in theory should be reduced by 50%, right?
Yeah. The
And this is
huge risk sort of
happening.
added in there.
Right. And this is constantly happening in crypto where everything is volatile and everything is, in this kind of fast-paced environment. And so again, during the 10-10 crash, some major altcoins bled 50% in a single hour candle. Traditional finance doesn't have to worry about this at all. But in crypto, liquidity is significantly more important and the market is significantly less mature. And so, if Bitcoin drops 10% a day, that everything else is going to go down with it. So it's really important to understand how market dynamics affect prices and valuations. And so
Mhm.
what do I actually use to value companies? I'll finally get back to your question. It's pretty tough. I mean, for me, I fortunately have been, in a VC role both at Falcon X as well at Anchorage, and I've probably seen thousands, maybe 3,000 fundraising decks.
Been a bit around the block a bit.
Right. And so I've got a pretty good gauge in terms of whether a valuation of a round is reasonable or if it's way off. It's always too high, pretty much never too low, just based on their stage, the level of progress, and what they're building. A lot of the time, the sector can kind of gauge the valuation a little bit. So, like, for example, like you might see like a pre-seed L1 that's raising at a 60 mil FDV. That could be a growth round for like an RWA issuer that's focused in a little bit more of a niche. So there definitely is a bit of a specific sector specific premium or discount.
Mhm. Yeah, and that's where you have to be really, head to the ground, knowing what the industry is sort of like at the moment. That's where you get a lot of, boosts from your experience.
Right, right. And for me personally, I'm super fortunate to be at a strategic fund where I am more focused on the strategic value coming back to the firm versus the underlying return of the fund. So I don't have to worry about it quite as much. And it's a little bit less important and a little bit less involved in the actual, due diligence process of reviewing a potential investment opportunity. So a little bit fortunate there. One last point that I would make on that is personally, I would say almost no valuations make sense in crypto. And this is why I am really bearish on token buybacks. I think that
Mm,
whole model is broken. I think in some cases it does make sense. For example, pumped up fund. They are
yeah,
making consistent, meaningful revenue and are in a really good, consistent process of buying back the token and burning it.
yeah.
And it makes sense for them, and I think more for a long term because they are certainly increasing the inherent value of the token. The inherent is the important part there because I don't think anything trades at fair value. And if you just look at the volatility, you look at the struggles of altcoins to maintain price after launch, pretty fair to say that a lot of stuff doesn't really trade at fair value. And so when stuff doesn't trade at fair value, if you have a company that's constantly taking their revenues and buying back the token, your token might be trading at $5. The fair value might be closer to a dollar. You're like literally just burning 80% of
Overpaying money.
right.
Yeah, you're just
If the
throwing money
token,
down the toilet essentially.
yeah, if the token drops, 60% in 3 months, like you are literally just burning money. I think there are so many smarter ways to actually put that cash to use. So just to sum everything up, I think valuations in crypto don't really make any sense. Super fortunate that I don't have to worry about that as much being at a strategic fund. Yeah, it's a really really difficult question to answer, and there are stuff that there are stuff that's coming out that I think resembles a little bit more of the traditional valuation world, but I think we're still a long ways away, and the market certainly has a long way to go in terms of maturing and getting into a somewhat comparable stance relative to traditional market.
Yeah, makes sense. I did find your sort of input on token buybacks quite interesting. Are there other sort of models you think make more sense? I know it works for, say, Pump the Fund or like Hyperliquid. They see a lot of benefit from the buybacks.
Right.
But for the other people that are kind of not in a space that makes sense, what are you looking out for?
Yeah, that's a really good question. Definitely not a one size fits all approach, given there are so many different sectors within crypto. But I do think generally putting that cash to growing the business is almost always going to be a better use of that money versus doing a buyback and burn. I actually talked to a project recently that had a really, really interesting idea with what to do with their revenue. And it was not quite buyback and burn, but something similar. So the project is called Glow and the token is already live and they're only trading right now on one DEX pool. So no centralized
Mm,
exchanges, just one DEX pool. And they're taking, I'm not 100% if it's 100% of the revenue, maybe it's like 80% of the revenue. And they're injecting that into the DEX liquidity pool that they're trading on,
mm,
which is so smart. I mean, it is a little bit of a one-off situation, right? Because this project is already launched, already trading, and they only have one DEX pool that they're kind of focused on. But I mean, they have absolutely solved it in terms of like what projects are trying to do when they launch a token. Anyone that wants to go in and buy that token, it's pretty small FDV. I don't think they do like an insane amount of volume, but the amount of liquidity that is in that one pool, it is so liquid. Anyone could come in, buy it, sell it with ease.
yeah.
And that is what you are looking for when you launch a token. Like you want institutions, I say that because those are, typically the larger players in the space, but you want larger players to be able to come in, buy and sell freely. And I just think it's so interesting that Glows is tied to do that with the revenue. And so many other projects struggle with that side of the house of how do I think about my launch strategy? Do I launch on a DEX? how do I manage that pool? They need a very small amount of revenue to actually sustain that pool relative to where they're trading. And I think it's so novel. So quite excited when I saw that design.
Yeah, no, it's definitely different. It stands out as something that not only is going to, help bring in more attention, but also make them stand out, feel more safe to kind of consider from these bigger buyers. It's an interesting way to go for sure. Yeah. So from your perspective, what are the key barriers for institutions entering crypto today? Would it be that, low liquidity, or are there other things sort of keeping them at bay from really seeing the full potential of crypto and getting in there?
Yeah, great question. Low liquidity definitely is a factor. I think that's a relatively vague answer, but I think that just kind of is another point in terms of the market not being as mature as what they're used to. But
Yeah.
there are a lot of things that institutions need in order to become comfortable within the crypto space. And typically it falls under, either regulations or user experience. So regulatory clarity has been a massive, massive catalyst not only for Anchorage, but for the broader crypto industry as a whole and for institutions. And, I think it really has moved the needle for institutional investors to allow them to engage with things like on-chain yield and RWAs with a level of trust that was previously missing.
Yeah.
And we really view this clarity as a bridge for institutions to move from curiosity stage to actual capital deployment. And there's other things as well. There was a pretty big accounting hurdle that was recently cleared that finally allows fair value accounting within crypto, which removed a pretty massive headache for a lot of corporate treasury. So a lot of things like that. I would say definitely on the KYC AML side, that is
Yeah.
one of the biggest areas that I'm constantly running into roadblocks today. Institutions absolutely love the yield that crypto and DeFi offers, but so often compliance departments forbid companies from interacting with smart contracts where the counterparty is unknown, right?
Yeah.
So the barrier is being solved by, permission DeFi pools, but there's so much else that's kind of being built there. So really excited for how that eventually is going to be solved, whether it's going to be at the smart contract logic level, whether it's going to be like a full permissioned walled garden. I think there's going to be a few different solutions that definitely become
Yeah.
winners in the
Battle it
market.
out until someone sees what works best.
Right. But yeah, I would say KYC AML is definitely the biggest regulatory issue that is kind of keeping institutions sidelined for now. But yeah, we're continuing to see progress on the regulatory side, continuing to see improvements as it relates to UI. And you can kind of think of UI as like, okay, you could potentially select a permissioned, arena to play in, like an on-off switch. Like that, I would definitely consider as kind of like a UI. So constant improvements there. So we're definitely getting closer and closer, and it's quite excited to see how excited institutions are about crypto. So it's
Yeah.
definitely
Definitely.
a good place to be right now.
Yeah. I think even 5 years ago, even less, you'd see all these institutions sort of seeing crypto as a very shady, sketchy, unregulated place. Is that still the case? Or have a lot of them really caught up and are kind of just now being held back by regulatory barriers?
Yeah, I think we've pretty much fully caught up. I mean, you're starting to see many institutions dip their toes into crypto, whether it's launching their own stablecoin, whether it's trying to leverage blockchain technology to replace some form of what they currently do today and replicate that on chain. So I think institutions are fully ready. They understand the underlying benefits of crypto. And it will still take a while for a lot of these very traditional kind of boomer enterprises to really figure out the best way to interact with crypto. These are very old, kind of slow organizations, and crypto is the exact opposite. Super, super fast paced, very nimble. And so I think we're certainly there. Like I think crypto certainly has gotten its validation from institutions. But right now, I think the biggest hurdle to actually getting to more capital deployment and more interaction is really the stuff around regulations, KYC, AML, and overall user experience.
Mhm. Yeah, it makes sense. Those are the big and the few things that really do just stand in the way. There are a lot of benefits that are, quite obviously seen now with crypto being around for so long. It's gone from very unknown to the general population knows what crypto is to some aspect now. When again, 5, 10 years ago, they'd have zero idea what even Bitcoin is. I think it's just a lot of growth and it's a bigger space now than it ever was.
Yeah, certainly.
Mhm. I think to kind of move to some of your own personal market reflections and just ideas of that, as your experience really helps get a good grasp of things. A question that's kind of existed forever. Do you think active investing strategies can consistently outperform Bitcoin or other top players? And why or why not?
Yeah, that's a great question.
Been around forever. The
Yeah.
dawn of time, people have been asking that.
Yeah, I think active investing strategies could outperform Bitcoin. I'll say could,
Mhm.
not will. And
Yeah.
and I'll say this with kind of two caveats. One, it has to be a sophisticated market participant, and two, it has to be in the short term. I think if you really zoom out, there are going to be very few investing strategies that beat Bitcoin over the long term. Over the past year, you've seen many liquid funds, many prop shops blow up that are very experienced traders that have been in crypto for, multiple years, and even ones that were potentially structured to be delta neutral and kind of safe from volatility due to just the flash crashes, black swan events, and just the extreme volatility in crypto. Certainly is very difficult to stay profitable for a while.
Yeah.
And so I certainly don't have the capabilities, and I think many people don't. If you're answering this question from like a personal investing perspective, the answer is no. It basically has to be a professional, experienced prop firm. I think could potentially do it. Very, very challenging.
Mhm. That makes sense. I think it is, something that's been shown over and over and over again that Bitcoin is consistently a very strong option. I think, like you said, it makes sense that in the short term, you can have a couple lucky wins, couple lucky, picks here and there, but overall, Bitcoin is kind of, showing itself to be the strongest for a while now.
Yeah.
So, how do you think the gap between strong fundraising narratives and long-term project performance sort of, pan out? I know you've seen a lot of projects come and go in the years. What do you think really, stands out there?
Yeah, that's a great question. Yeah, I think the narrative cycle is shrinking in crypto. So
Mhm.
narratives are what raise VC money, but fundamentals are what sustains the token price, right? And a lot of other factors. But I think narrative cycles right now are moving incredibly fast and have only been increasing in pace over the last 3 years with just how digital of a society we are. And a project might raise on AI/crypto narrative, but by the time their token launches in, 12, 18 months later, the market's attention could have moved to something else.
Elsewhere
So
entirely.
yeah, the narrative cycle and shrink is absolutely shrinking in crypto. And you have definitely seen this in the crypto space where over the course of a bull market, there tends to be a handful of different narratives that operate for, maybe 2 weeks to a month at a time, and then it's on to something else. During kind of the initial 2020 bull run, you had, your NFTs, then you had your, kind of the L1 wars. And you just had these like little different mini epochs within a bull run. And I think that, the narrative cycle is only getting smaller. I think there's a little bit of a execution reality check. So when a strong narrative gets you a high valuation at launch, if the project doesn't immediately kind of show revenue growth or user growth, TBL growth, the market definitely punishes it. Yeah, it's certainly tough out there for founders because it just moves so quickly that it's really hard to capture it's hard to like be in the limelight for a long period of time. Whether you're trying to do a fundraise and going out to VCs, whether you're trying to build a community and really building out your go-to-market approach, it's just really difficult to capture people's attention in crypto. And I think
Mhm.
the attention in crypto also like with different things like airdrop farming, with different opportunities like the meme coin frenzies, you have folks in crypto that are like so locked in to finding the next opportunity that they don't even really care about the individual ecosystems or companies that they may be investing in or supporting in. All they're looking
Yeah.
for is like the next thing. And so it just becomes really difficult for founders to have staying power over a long time.
Mhm. Yeah, the attention is split across so many things nowadays, and it's just, who knows what's gonna keep accelerating, but it's definitely hard, especially when a project may take even a couple weeks to really get off the ground. In that time, narratives can completely shift and people are focused on an entirely different space.
Yeah. Not only do you have to compete with like potentially another narrative, but you have to compete with like Bitcoin potentially going down 20% or like a major hack or,
Mhm.
something like 1010, which was a major liquidity crisis. I've actually been quite fascinated looking at CoinGecko ever since 1010.
Yeah.
During my previous days as a market maker, CoinGecko definitely was where I lived a lot looking at projects and looking at where a token was trading, the different exchanges, the depth, trading volume. To me, it just seems like the overall liquidity in the space after 1010 has come significantly down. And that
Yeah.
also, again, makes it more difficult for founders to go out and launch a token and be successful when, you have much less liquidity, likely lower KPIs for market makers as well. So yeah, very, very, very difficult to be a founder in the space.
Kind of speaking about the biggest, I'd say, narrative right now. With the rise of AI, do you think crypto still has strong long-term potential, or might that shake things up a bit? I think even on this show, we've spoken to a couple people from different walks of the crypto and AI space, and they all have different sort of views on things. Some think crypto will be the currency for AI. Others think AI will take a lot of the attention away or introduce new ways that people can kind of move money around.
Yeah, I would definitely put myself more in the they are complementary bucket versus competitive. Definitely agree with the programmatic money side of it, and I'll get into it. Autonomous agents are becoming increasingly more and more popular, and it'll be really interesting to see the kind of later stages of what that looks like, the type of permissions that we give AI agents, and what they're doing from a currency perspective and microtransactions. But I certainly see crypto as a huge benefit to what AI agents need to be able to do in terms of micropayments, 24/7 settlement, just being a faster financial system. So I certainly see it being complementary as it relates to currency. The other side is AI creates this like abundancy, right? Crypto creates digital scarcity. And so as AI makes it incredibly easy to generate things like deepfakes, infinite content, you have, blockchain cryptography as well as, things like ZK tech that will be really crucial in terms of verifying human identity and data authenticity. I certainly do see them as complementary. I think right now it certainly feels a little bit more competitive, especially
Yeah.
if you're in San Francisco. It feels like
Oh, it's the tension. It's hard to get eyes on you if you're not on the top big thing right now.
right. But I do think as both AI and crypto mature, that they will look more complementary versus competitive.
I think there is, at least for me, even some curiosity, maybe worries about how things will look when AI is, AI agents are some of the main players in investing. When they are the ones that are doing millions of transactions a second, how is that going to change the ecosystem? Do you think it might fully root out people that are individual retail investors, or how is things going to change there?
Yeah, I wouldn't necessarily say it's going to be detrimental to your retail investor. I've definitely seen a lot of projects that are pitching your sort of AI agentic workflow that is actually managing money, making trades on your behalf, potentially finding the most optimal route to complete some sort of swap if it's cross chain, different things like that. I don't think we are quite ready for at least institutions. I'm sure some folks on the retail side would love to give, AI agents
Yeah,
some money and let it
experiment
run.
with it a bit more.
Right. But yeah, institutions certainly aren't at the point where they trust AI agents to fully be managing their money, managing a portfolio, running trades. But I think we will get there at some point. And I think AI will certainly democratize access to those types of strategies. I think there will be many different retail focused layers, not necessarily exchanges, but more layers in the either crypto or kind of traditional space that
Mhm.
allow retail folks to put on strategies or leverage AI, very similar to like a chat bot to like, okay, here's my current portfolio. I want to have this sort of diversification, or I want to be allocated to X, Y, and Z. I think AI will certainly cater to both retail and institution. I don't think it'll be at the detriment to retail.
So it is, tech with a lot of possibilities. I think it's going to depend on how it's implemented. I think there are ways that can be implemented to, sort of just assist everybody instead of taking over roles in the space. So we wind down this interview. I want to get one last perspective from you. What areas in crypto are you most interested in right now? I think you've seen a lot of things change, a lot of things come up and down. And speaking of all these narratives, what are you, maybe not even investing wise, but what is catching your eye in terms of potential?
For me, I think the most interesting intersection right now is around RWA and yield bearing stablecoins. Institutions are obviously extremely excited about all of the innovations right now in the RWA space and being able to generate yield in many diverse ways, not necessarily generating yield with crypto underneath the hood. It could be something like, a traditional repo market. I think that is very, very interesting for a lot of institutions, and I think there's going to be a ton of innovation around how things are currently done today. Have seen a ton
Mhm.
of really interesting things in like the trade finance space specifically. Not only institutions, but on the yield side, I just think it's going to be absolutely massive for a lot of your emerging market economies that today don't have access to the dollar, don't have access
Mhm.
to like the US stock market. That to me is, I think, where I'm most excited because there's just so many hurdles and regulations in place that don't allow a lot of folks access to these types of opportunities. So to me, that is really what's most interesting. Now, I would say there's some other things that I'm quite excited about.
Mhm.
Definitely prediction markets. I think that is a huge, huge space. And crypto is definitely cementing itself as a key player within the overall prediction market space.
Oh, yeah, it is the currency for it. I don't know if there's even any prediction markets that are running on fiat. I think it's very much cemented itself as if you want to, you know, be in these very quick, very fast moving prediction markets, you have to be working with crypto.
Right. And I think there's a ton of really interesting innovation that's happening within that space. We actually backed a company earlier this year that is enabling leverage on top of prediction markets. So I think that'll be pretty cool. That was a pretty interesting design. We also did another deal this year that is a tokenized stocks play, but specifically democratizing access outside of the US. And they're doing it in a
That's interesting.
CDP structure. So quite excited about that opportunity as well. And yeah, I just think like the more things that become kind of standard or enabled from a collateral perspective, I think it'll just really unlock so much stuff across RWA prediction markets in the yield space. So that's really
Mhm.
where I spend most of my time. And for me, I'm constantly thinking what is interesting to our institutional investors. That typically is what drives the most strategic value back to the firm. So that's where I spend a little bit more of my time kind of wearing an institutional hat. So a little bit less retail focused, but yeah, quite excited about what's going on in that space.
Yeah, there's a lot of interesting branches right now that I
Yeah.
think people are definitely able to sort of pick things that interest them and really follow that part of the industry. I think it's a lot less narrowed down to the early days of crypto, where it is essentially just like, will these couple coins continue to go up in value? There's a lot of more tech being developed. I think final question that we ask all of our guests: if you could share one message with founders building in crypto today, especially those preparing for fundraising or TGE, what would it be? What is the one message you can give to kind of help them continue their progress into building something that makes sense and is investable?
Yeah. I would say obsess over distribution versus just focusing on the tech.
Hmm.
I think the best tech rarely wins in crypto and constantly see founders that are so hyper focused on the underlying value proposition that they miss out on so many of the key elements of actually finding distribution, finding or establishing their go to market strategy. And you've seen it in crypto so much where ZK Tech, I think, came out in 2022, and that was a huge narrative
Oh,
that
massive.
people were investing in, that people were talking about, and pretty much nothing has come to fruition within the ZK space over the last 3 years. And so I think there's this misalignment in terms of like people in crypto are so excited about like, oh, I'm solving this problem in this completely unique, novel way. The tech is unbelievable. And it's like just because you have the strongest value proposition doesn't mean people are going to care. You have to think about how do I win market share from something else? Because like right
Mhm.
now, there's not too many areas of crypto that are unexplored. And what I
Yeah.
mean by that is like someone is building something adjacent to what you want. And at the end of the day, you are competing for a few different things. It's like TVL, mindshare, and like eyeballs. Like there's a very few things that you're actually competing for at the end of the day. And so I think founders definitely focus a little bit too much on the underlying value prop and the tech and not focused around actually building around it.
Makes sense, especially in, as you said earlier, a very open sourced feeling ecosystem. A lot of times you can build that top best tech possible, and someone else can come along and build something, maybe very similar to it, maybe exactly the same. And then as long as they have a better eye for distribution and bring that attention to themselves, 9 times out of 10, they'll outpace you.
Right.
Mhm. That's super interesting. Thank you again for coming on the show. It was an amazing chat. Really, really useful insights here. It's very interesting seeing someone with, such a broad range of experience in crypto and in traditional finance. I think it brings a very unique perspective.
Absolutely. Thanks so much for having me on. This was great.
And for those watching here on YouTube, make sure to subscribe to the Uncommon Consensus YouTube channel to see what us and more of the top builders in tech have to say.